Yes, so guys, moving forward, we're going to look at the simple approach to understanding market structure. Yeah, so the simple approach, since we already now identify the highs and low, we're going to use a simple strategy called targeted and protected structure, right? So in simple terms, we're targeting and protecting the lows in different scenario, right? So I'm going to start with the uptrend scenario, uptrend or bullish scenario, right? Or bullish scenario. So basically, what we do in this, we want to know what we are protecting, what we're targeting in terms of the trend, right? So being an uptrend, price moves in a manner, this kind of manner. As you can see, that's our illustration of an uptrend. And we said that up here we have what we call highs, and the downer points are called lows, right? So I'm going to just go ahead and denote the multiple copies. So come and do this. Then I have that over there, and I'm going to do this for the L, then we kick off, right? So that's another low rate. So yes, so the one rule with this, when I'm in an uptrend, what am I doing? I'm targeting the highs taken out, and I'm protecting the lows. Protecting the lows, right? So we target the highs to be taken out, and as you can see, they're taken out. When we see the price going above this high, that means it has been taken out. Let me use yellow for this. Purple, I think. So as you can see, when you go above this high, that means it has been taken out to create a new higher high or a new high. Then we protected the low, the previous low over here, right? So if price starts from here, comes and creates a high, this is what you call a trading range. And when price comes down, we are protecting this low to make sure that price does not go below this low over here, right? So when price reverses, we now target from this point, we now target this high to be taken out so that you can create a new high, right? So after creating a new high, this is our new high and this is our new low, right? So we are targeting the new high we have formed, and we are protecting our new low over here, right? So price comes down, then it reverses at this point and creates a new low or a new higher low. And price now targets this high here, right over here. So we target this high, take it out, and create a new higher high, right? Then when price reverses, it comes and reverses at this point over here, creating a new higher low. Then now it targets the high over here, we take it out, and the series continues. So in targeted and protected structure, we are targeting the highs, protecting the lows. So we target the high, take it out, create a new high or a higher high, then we protect this low. Price comes, reverses without taking out the previous low, then we form a new higher low. Then when price reverses, it targets the new high formed or the new higher high to create a new higher high. So that's just the simple concept, right? That's just the simple concept, not yet execution. We're going to take it step by step, then we shall see how to execute simply. We shall add a few concepts because you can't execute entirely using this, no? You're just identifying the structure and trying to understand how structure is moving, right? So that's it for the uptrend, and there is no much science when there's no much difference. It's not rocket science when it comes to a downtrend. It's pretty much the same exact thing, right? The same exact thing in a reverse format. So downtrend, what happens is we protect our high, first to form a new lower high, and we target the low to form a new lower and lower low. So I'm going to illustrate this quickly. So for a downtrend, I think I'm going to use red. So we have in this scenario, oh sorry, that's bad, forgive my art. We have a better illustration in this. So we have this high, a low, lower high, lower low, lower high, lower low, lower high, lower low, right? So the same thing happens, right? This is a high, this is a low, oh sorry, this is a lower high, it's a lower low. Same thing happens, right? So we're having price move from this high to this low, then it reverses upwards, right? So after reversing upwards, after reversing here, it forms a swing point or a new lower high. Now from here we target the previous low and we take it out. As you can see, when we take it out, we form a new lower low. After forming a new lower low, price reverses. So when it reverses, we are now protecting our previous high. Now when it reverses over here and gives a confirmation, we now target the low, right? And it breaks it similarly, then the series continues. The same series continues. So with this, we're basically understanding both the uptrend and a trending market is what we are considering in this case scenario, because we won't use this in a consolidating market, right? And it's not really healthy for you as a beginner or at any one stage. It's not healthy for you as a trader building a skill to trade in a consolidating market. So we try our best to trade in a ranging market. So this is a simple approach that you can simply use. When you identify your highs and low, you now see what you're targeting, right? Protecting the low, targeting the high, protecting the high, targeting the low, depending on what case of market structure, what case scenario you're in, or either an uptrend or a downtrend, right? So we're going to look at structure breaks. So I'm going to draw a full illustration of a chart, of course a line chart. We are going to do one whole video later on that will be representing the shall do one video that's going to be putting all of this into a charts, right? We shall be doing all of this onto the charts. So I'm going to have a full case scenario because we're going to look at structure breaks. Then how to execute with structure, we shall do it on the charts when I'll give a few confirmations you can use based on candlesticks to just trade structure. For those of you who are comfortable with just start playing price action, right? We shall look at the concepts you can influence onto structure simply to get some trades off of that, right? So going on to breaks, I'm going to first have an illustration of this kind, have some kind of uptrend, then definitely something like this, represent a consolidation. Then you can have something like this to represent our downtrend, right? So of course we have all the three scenarios. I'm going to name this the uptrend. Then we shall have the consolidation right over here. Then we shall have the downtrend on the other side. So I'm gonna zoom in the text, I guess. Just a bit. I zoom this in. I hope you can see that. I hope the illustration itself is sizable enough for you guys to see. Yeah. So this is going to be our point case scenario that we're going to use to look at what we mean by breaks, right? So a small recap, as I said, when you're in an uptrend, the easiest way of identifying the uptrend, you can draw a line right below, right, showing to the upside. So it's going to be at all your higher lows. That's why you're going to draw that line. Then for that downtrend as well, sorry, for the downtrend, you'll draw it above, right? So we shall look at the concept of support and resistance when you come down, of support and resistance, then trend lines when it comes down to executing with structure, right? But for now, you can use this line. We call it a trend line. Just identify whether you're trending upwards or downtrend, but it's a very basic tool you can use. So just take this as simple as it is. So I'm going to be using a few lines here to break. So when we are in an uptrend, I'm going to choose blue for that. When we are in an uptrend scenario, what's a break of structure? That means if I have a high, over here, and then I have a low right over here, given that price hasn't gone this far yet, it's still within this high and low, right? If price goes above my high, then it has broken what you call structure, because it has broken a structure point, right? We call it a structure point. When price does this, then price has done what you call a break of structure, or we term it as a BOS in most books and abbreviations and videos, or in most chart work, we shall call it a BOS, right? When price breaks a high in an uptrend scenario. So when every time price breaks a high, every time we see price break a high, every time price breaks a high, or we put a structure point, every time price breaks a high, we call that a break of structure. It's a break of structure. It's a break of structure because price has broken the high, so this structure is now not invalid. We're looking for new structure. When price comes and forms a new high, then that's our new structure point and it reverses, right? So every time price breaks a high or a low, in simple terms, you can just call that a break of structure. We shall see how to play around with break of structure later on when we dive down into the chart work. Yeah, but for now, that's as simple as it is. A break of structure is simply whenever price breaks above a structure point. So similarly, so in a consolidation, you don't really get breaks. Probably you don't really get breaks of structure because you're looking at the highs and lows that are being protected. Both are being protected. So you don't expect breaks of structure in a consolidating market. Then for the downtrend, every time price breaks a low, every time price breaks the low, the previous low, every time price breaks the previous low, we call that a break in structure, right? Because we have broken the previous structure, we're now looking to form a new structure point, right? So all these lows, every time they break them, we have a break of structure. Every time we break a previous low to form a new low, we have a break of structure. So that's just as simple as it is. That is as simple as it is. So in the very next video, I'm going to go down on charts and I show you from A to Z how to see structure points both on the candlestick charts actually, and shall be counteracting it with a line chart as well to see if it's valid or not valid. Then we shall go down with a simple technique I use to identify valid structure highs and lows. Then we shall go down to the targeted and protected structure on a chart, just representation. Then I'll do a separate video on just how to execute with structure. It will be a long video because I'll also be giving a few strategies you can use when you're just using structure to execute, and first with candlesticks, then with trend lines and a few more concepts, basically support and resistance. So kudos everyone, thanks for being here. Do not forget to subscribe, hit the like button, and there's a link in the bio to my Telegram channel. I share free signals every week and more content will be shared into my Telegram channel once in a while. Yeah, and my communication is basically passing there. I have an open chat WhatsApp group for those of you who use WhatsApp as well. Yeah, so that's it for now. Thanks very much, and I hope you guys have a blessed day.